Hello, this is Martin from Secret, the channel for learning about trading and investing. Welcome to daily stock market analysis show, where we are looking at what happened in the trading during the previous day and what we can learn from it and how we can plan for a better trade for the upcoming trading day. And this is analysis for October 27th, Thursday, tomorrow, 2022. So, what kind of day we had and where are we in the markets? It seems to be that we are in a crucial resistance zone. Let's look into the charts and see what does it happen. Look at this. This is the trading day yesterday. Remember, this is a truncated week with just three trading days, out of the 5. The 2 holidays falling this week, and look at this. The last trading day is showing bearish engulfing pattern. That's the same in Banknifty. It's a candle that is completely engulfing the previous candle, which means the red candle, which means simply that the bearishness could continue on the short term, is what it indicates. Basically, the chart price patterns. Now, it may be worth, even though it's only a Thursday tomorrow, the week is still not at all 2 more days for the week to end, but we are at a crucial zone, is very much evident from this chart. Right? We are on a breakout zone, we are in a resistance zone, or I call it. We are at a major breakout zone, and it's very much possible that the markets fail to meet the expectation of going up, and then it could reverse and make another swing low. So that's very much possible. So that way, this week is very crucial. Tomorrow also is crucial because it's an expiry day, adding up to the volatility. So what are the numbers? Let's specifically go for the October 27th first. So the previous trading day we had a losing day, actually, as we saw. 74 points lost in this volatile, and it formed a bearish engulfing pattern like we've seen. Banknifty also lost 182 points. That's less than 0.5% yesterday on the Banknifty, and so both indices lost less than half a day and then formed bearish candlestick patterns on daily charts. Intraday, it attempted to move up first, failed, and then it was trending down in the case of Banknifty. In the case of Nifty, it was clearly trending down after an attempt to move up in the morning, trapping the bulls. Right? The Banknifty also, it attempted to move up in the pre-market and the initial market opening time, and then it failed there, and then it was Banknifty tried to be in range mount for a lot of time, and then at 3 o'clock it fell down. So it did fell, losing the 182 points that we discussed earlier. So there is a double top pattern still visible on the charts, and it's a very crucial zone, resistance zone. We have seen that. So there is a trend line resistance on the weekly patterns. It's resistance zone. So breaking out of this has to be confirmed with the green close, only then we can say that the rally may continue. But otherwise, you also have the positiveness of the price still above the moving averages, and it's still there. It is bounced up, and then clearly the moving averages are there down below, comfortably on the weekly as well. Right? So price patterns are very bullish, right, with respect to the moving average support. So now the question is, would it stop? Would consolidate here for a longer time and try to break out eventually, or would it fail drastically and then form a bearish candle and then try to make another swing low? Right, so that's the question in front of us. It's $1 million question. That's it. Price patterns. Moving on to support resistances. 17,839 and 17,992 are the resistances on the subside. Look at this. We are talking about this resistance zone and this is previous swing lows, swing highs. I mean, downside you have 7. Downside, what do we have? We have the 17,430 and 17,300, 329. That zones. It's previous swing low and the gap support. So downside. Banknifty similarly has got resistance at 41700 neighbor levels, then 41850 levels. And then all-time high levels, rounding number 42 is also coming after that. Downside you have 4600 nearby zones, and then you have a gap and a previous swing low, both 4208. Right? So those are the levels for the Nifty and the Banknifty support resistance level. It may be worth looking at the open interest also at this time. open interest. We'll discuss the levels on that. So then you'll have to correlate that levels with the support resistance levels, so that come out to a conclusion. Bullish bands are showing that there is expansion now. It's no longer a contraction. So that's over now. Now the price bands are moving, expanding on the both sides, and the price is moving up. So there is a potential that it can further move given the bias of the median, march down below the price. Price is much above that. Same with the case of Nifty also, right? It's expanding on the upside. So that's what Bollinger Bands is showing. Momentum is slightly slipped in the case of Nifty on last trading days. Price action just slipped, but Banknifty is intact. Banknifty is intact. With although the momentum had dipped, it is still in the bullish zones of momentum and it's intact. But Nifty has some trouble here. There is a bearish divergence that's possible. It's already confirmed on the weekly charts we're talking about. So momentum, bearish negative divergence is possible that can move the price down on the Banknifty. There is a possibility, but the week is still not finished. So just have to wait for that week to end to get a confirmation on that. But otherwise, momentum slipped on the Nifty into the sideways on 1 day's action, and Banknifty still holds on the bullish zones. Right? Trend is bullish both, and Banknifty is even more bullish because it is having a rising strength part of the ADX indicator. Right? VIX has cooled off, which is really good. Less than 17, 16.88 is where it closed. That's good. Futures is showing long unwinding, which is bearish, and a short build up in the Banknifty. So that's kind of not that great. Which is why, because of the last build up that happened on a negative day, obviously it ended up in a short build up and a long unwinding on the Banknifty and Nifty. Options wire levels for the expiry tomorrow. Tomorrow expiry 17,500 and 18,000. So the highest call rating is happening at 18,000. Highest put rating is 17,500, 40,000 and 42,000 is where the Banknifty expiry support and resistance levels are. Highest put and call rating is at these levels for the expiry 27th. Monthly expiry. We're talking about the monthly expiry. This is the last week of the month, and you have the PCR not that great for Nifty, but Banknifty is bullish. But Nifty also is closer to the bullishness than the bearishness. So overall, even though the last trading futures build-up is negative, overall you can say that the OI is more towards the bull side. So you can say sectors auto and reality did not perform that, so they closed kind of flat on the last day, and all of the major sectors have moved 0.5% to 1.3%. All the sectors are in the momentum sideways zones. None of them are in the bearish zones at least. Heavyweights, FMCG, reality underperformed 0.5% to 1%, and all other major heavyweights, ICICI Bank, Infi, TCS, and all the other major stocks, and the 5 major heavyweights that we normally consider, 0.5% to 1.25% of performance has happened, while FMCG and reality were not doing good. IT and the pharma is almost in the bull zones, you can say, in the short term momentum perspective. All the heavyweights, if you see, there none of them are in momentum, having a momentum which is in the bearish zone. They are all in the sideways. Some selling has happened on yesterday, Tuesday. In a truncated week, the Fed had sold very little. The Fed has been selling very little and buying at times. That's what is happening since the last 1 week. So not selling too much itself is a relief, and dealers are buying to compensate for that. Around 900 crores buying has happened in the cash. That's about the institutional data. And then what does the crude oil, commodities, dollar and gold say? Crude oil is cooling off, consolidating less than 85, which is fine as long as it doesn't move to channel top of that weekly charts. Dollar index has shown some pullback, and now still the moment is the bullish zones. It is at the support zones. There was a bearish divergence which worked out, and now there is a bullish divergence which can mean that there is a possibility that the price takes support there and then moves further up. So that is where we are. USD also has some cool of ascent, but still at the very all-time low levels of rupee at 82.3. So that remains to be at trouble. Gold is attempting to move up after it has fallen down the major support zone, and it's in The momentum, I believe, is remaining in the bearish zones for gold. No, it has climbed back in daily time frame. It has climbed back in the bearish zone. So there is some corrections there. So gold has climbed up in the bearish zone. So it's just as of now it's showing green. We'll have to see tomorrow pre-market. US indices as of now it's showing flat, but it has done a very good bounce. If you just look at the US market, maybe let's look at the Dow Jones. You can see that the Dow Jones futures is showing that there is a good expansion of the price. Short-term momentum has climbed in the bull zones, and there is a good bounce that has happened in the major support zone. And channel top is still another 1,000 points up, and then that's a possibility. So let's keep a close watch of this. If there is going to be a resistance that is getting hit at this, so if that's taken on, not taken out, if that resistance on the top is taken out, then that would mean good. Just quickly view these features of Dow, and you can clearly see that if the US markets are able to conquer this, then it would mean that the downside is done with. If not, then we can expect another zigzag downside channel movements, which could take it back to a new swing low below that major support zone. That's a possibility. Right. So, but good retracement has happened now. Now I'll wait for the candlesticks patterns to see if there is a just hit the top and then is it going to come back down. But you can see that it's very well within a trim line. So there is possibility on both sides. It can either break out from here or it can fall down. Right. But keep a close watch for the US markets that way. So that's what we are, and not stock picks for tomorrow because it's a truncated week. It's difficult to pick up unless steady trading happens. So I'm not putting that, but check out my Twitter handle at the rate impulse, where you can see very regular postings. Very regular postings on different charts, and right. I keep updated, with different stock options, and just look at this Axis Bank. So I keep on posting every day. So follow that if you're not done that, right? Major events. There are some job status that's coming today or tomorrow night. That's Friday or morning, and then it's a truncated week, and then you have an expiry tomorrow. So the volatility can be expected. Just after having studied based on all these different parameters, let's just conclude and come to a view for the market. The market view is cautious bullishness. Cautious mild bullishness is what I have for tomorrow. Reason? That bearish engulfing pattern spoiled it all and made it cautious. Otherwise, we had attempted a good breakout, which is very much evident on the expansion of the Bollinger Bands on the upside, but that bearish engulfing patterns screwed it up. Trend crossovers, Banknifty's strength, Banknifty's momentum pricing, so overall Banknifty is much more strength, has much more strength in the price action PCR and several possible. Moving average price moving above that. VIX is cooling off. Good. Institutions are not selling. DA is continued to buy. All this, make me to think that we are still in bullish. We may break out that. That's what my view is. It could differ, but one thing that we have to keep in mind is we are at a very crucial zone. Anything would happen. It could break out, or it may face resistance, or it may consolidate there for some time and then break out or break down. So all these possibilities are possible. It's very difficult to predict because we've seen the charts that it has been attempted multiple times at the same zone. It has multiple times failed, and this time we may make it. Probably, you never know. Those markets has done a very good reversal, but the rupee is still, dollar is shooting up and rupee is still weak, 82 plus. It is not, in spite of all the intervention by the central bank, it still remains 82 plus. That's good in one way for corporates. Another way, it may not be good for the markets. Overall, it may not be good for the rupee to be such weak. Weak just cool up is very good, but still you have to be cautious. It doesn't take too much of time to spike up to 20 back again. So tomorrow's expiry may be between 17,500 if it is falling down, or 18,000 could be touched if it is rising up with the cap up or something like that. 40,000 and 42,000 is the range for the Banknifty. That's what YI and the price sales are showing. So there is a probability of the resistance winning over once again and then we making another swing low and breaking down. So as I said, anything is possible that way. But the bias shows that there is a potential for further up move is why my view has been mild bullish. But the latest day's candle, as I told before, make me to think cautiously about the bullishness, right? And overall, if you see 16, 500, 50, 750, that zone is where the support is there, major. If it all be for the upcoming weeks, it will not happen one day, so right? 37,000 downside also is a good support. Any breach of that, be trouble. 850 is conquered, and we have a breakout there. 42 is conquered, then we have a breakout on Banknifty. So that's what bulls may be looking for, but downside and upside both we have to keep a close watch. You never know what happened in the market. Is a game of probabilities, possibilities. That's it. No predictions work. You can only talk about probabilities. Manage your risk. If the VIX spikes up about 20, stay out of the trade or cut short your position size. But as of now, option traders may be finding an opportunity since the VIX has cooled off. Right? Expiry volatility can be there tomorrow, so be cautious about that. And always, when you're taking positions overnight, hedge your positions and also protect your long-term capital if it is falling down drastically. And if you really quality stocks, protect them with option strategies and get vendor links. Refer to the links in the playlist to check out the videos on that if you've not seen that. So my view is cautiously bullish, mild bullish for the next day and an expiry day. So good luck in trading. I hope this helped you in some way or the other to frame up a view and a trade plan for the next day. If that helped you, definitely subscribe if you're not done that. Share it to maximum. We have very few subscriptions. I appreciate your help in this regard. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.